Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane.
Welcome back to our channel where we bring you the latest news and analysis on the stock market and the economy. Today, we're going to talk about Intel's upcoming earnings report, and what we can expect to see when the company releases its fourth quarter results and guidance on Thursday. Before we dive in, let's do a quick recap what happened in the market today. U.S. stocks were initially dragged lower by the tech-heavy Nasdaq but mostly recovered in the final trading hour. This is because of the ongoing tug-of-war between growth concerns and hopes for a Fed pivot. Microsoft earnings topped estimates, but guidance underwhelmed amid a softer outlook for cloud revenue. This caused shares of other mega-cap companies to underperform in sympathy. Additionally, European equity markets were down moderately on geopolitical concerns while most Asian markets were closed for the Lunar New Year holiday. However, there is some good news as well. Bonds were higher as the 10-year Treasury yields fell modestly to 3.45%. The Bank of Canada also hiked rates by a quarter point and signaled that it will pause, making it the first major central bank to make that pivot. This week is also a big one for earnings season, with about 20% of the S&P 500 companies reporting results. While Microsoft was in the spotlight this morning, the initial pullback in major indexes reflects broader investor concerns about the outlook for corporate profits amid a slowing economy. However, the first estimate of fourth quarter GDP, which will be released tomorrow, is likely to show that the economy grew 2.7%. This suggests that there is a good chance that corporate profits could meet or exceed analyst estimates, especially since these estimates have been lowered over the past month. Central banks are also starting to talk tough but prepare to move to the sidelines. Since the mid-October lows, stocks have bounced about 12%, supported by better inflation data and hopes for a Fed pause. It's suggested that a trend of disinflation is emerging, which sets the stage for the Fed to downshift the pace of rates hikes and move to the sidelines by spring. But the easing of financial conditions that has occurred with the stock market rallying and bond yields falling is likely making policymakers uncomfortable. In conclusion, the stock market and economy may be volatile in the near term, but there is an opportunity for investors to diversify into international markets and quality parts of tech for a more sustainable rebound in the second half of the year. As always, it's important to do your own research and consult with a financial advisor before making any investment decisions. Now that we got the recap out of the way, let's look at Intel's earnings projections. According to a recent note from Citi chips analyst Chris Donnelly, Intel may report another negative earnings surprise when it reports its results this week. Donnelly cites continued weakness in the PC and data center end markets as the main reason for the expected disappointment. He expects Intel to guide below the normal seasonal range for first quarter revenue and EPS, and also expects the company to give full-year guidance and talk about a recovery in the second half of 2023, but he does not believe it will happen until 2024. This is not entirely surprising, as the PC market has been under severe pressure as consumers hold back on upgrading their pandemic-bought models. Global shipments of PCs crashed 28.1% in the fourth quarter of 2022, according to INTC, and the research firm estimates that global PC shipments will fall 5.6% in 2023. This marketplace weakness led to another challenging quarter for Intel and its rivals in the third quarter. In late October, Intel trimmed its full-year profit guidance to $1.95 a share from $2.30 previously. The company promised $10 billion in cost cuts through 2025 to offset the top-line sluggishness. Donnelly also added that Intel is likely to aggressively cut costs in 2023 to regain credibility with Wall Street, which has helped propel the stock up more than 13% so far this year. But investors may stay locked in on market share loss for Intel versus its rival AMD and how it stands to shape sales for the year. Despite this, Intel has not had a run-up coming into earnings, and the market maker is expecting a 2-point move in either direction. However, as a long-term holder of Intel, I like the company for its dividends, and I am not expecting a surprise from Intel until they finish their new manufacturing plant in Chandler, Arizona. I am a long-term holder and will add more when they drop. Overall, while it may be a tough quarter for Intel, it's important to remember that the tech giant is still a solid company with a strong track record. And with the company's new manufacturing plant in the works, there may be light at the end of the tunnel for Intel's long-term investors. Thanks for watching, and we'll see you in the next video. Don't forget to like, share and subscribe to our channel for more updates and analysis on the stock market and the economy.